where I'm from and what we offer along these lines. And I'm really excited to take a tour with you folks to some of the tools of quantitative analysis, which is definitely the approach that I use. And so without any further ado, let me get a screen share up. And I'm sharing a higher resolution screen. That should work. All right, fantastic. And one more piece right here. All right, so give me just one more second here while I'm getting those links out, and then we are good to go. Okay, so quantitative analysis for retail traders is here to stay. I am Bryan Klindworth. I work with Alpha Shark Trading under Andrew Keen. I've been with Andrew Keen now since 2017, although that is not where my journey in trading began. But first, let me cover our risk disclaimer. Day trading, short-term trading, options trading, swaps, and future trading are extremely risky undertakings. They generally are not appropriate for someone with limited capital, little or no trading experience, and/or a low tolerance for risk. Never execute a trade unless you can afford to and are prepared to lose your entire investment. All trading operations involve serious risk, and you can lose your entire investment. No trades are recommendations or advice, and we cannot be sued for losses of capital. All trades are for educational purposes only. Contact your broker or RIA, that's Registered Investment Advisor, for execution, margin, and other capital requirements. Everyone watching this presentation adheres to all disclaimers on optionhacker.com and alphashark.com. And you'll see in a little bit why on PowerPoint, which I'm not a huge fan of, I don't do full screen because I'm going to be bringing in stuff from outside of PowerPoint. All right, so a little bit about me. Again, my name is Bryan Klindworth. I'm 43. I've lived in South Jersey now for about 6 years. And I moved up here from the South for the sake of my career. I have a bachelor's in economics from University of North Carolina at Chapel Hill. I graduated in the spring of 2008, just in time to watch the great financial crisis hit. And so it did take me a bit to get some of the breaks in my career. That being said, about the time that I was finishing up my time with Chapel Hill, I saw my first candlestick chart. And I'll never forget it. It was in a random book that I was reading. And I saw my first set of technical analysis and I fell in love with it. And I wasn't sure how, but I knew that's what I was going to do with my career. And it turns out to be correct. It was just a little bit longer of a journey than I thought it would be. I got my first break in 2013 when a registered investment advisor agreed to mentor me as first a stock trader and then a stock option trader, and gave me access to tens of thousands of dollars worth of industry level classes and courses. The books were so expensive, I could not take them out of his office. I would come down there regularly, multiple times per week, in order to study trading. And the more I learned, the more I fell in love with it. Probably the same thing that many of you can describe. It was fascinating. It was alluring and enticing. And there was opportunities for mathematical skills to be expressed everywhere, or so I thought. I learned how to code at that same time, starting about 2013, including coding for trading platforms. My primary platform is ThinkorSwim, and then I also code for my quantitative analysis software. As soon as I learned what quantitative analysis was, about the time I got my first break in this mentorship, I immediately started to favor this approach for analyzing live market situations. The reason why is quantitative analysis is more of an approach designed for an information environment where our data is constantly changing. Whereas a standard distribution model assumes a certain staticness in the population we are trying to measure. And quantitative analysis, I feel, is the better approach to a market where our information is constantly changing as we're measuring it. I have about 3 years of experience with doing actual quantitative analysis. And I promise you folks, once I do this demo today, I certainly hope you're going to be pretty amazed with some of the power tools that institutions have and that are working against us, because one of my missions is to put those power tools in the hands of retail traders. And I'll be able to make the demonstration pretty quick and pretty convincing. I've been hosting a live trading room with Alpha Shark with Andrew Keen for also about 5 years. And again, I really appreciate the invite to come and talk about some of these topics. I don't think that I can talk about trading in any capacity, no matter how detailed, without first talking about mindset and philosophy. And so we start with my philosophy on trading and what I learned over time and taught myself. My philosophy is a sharp focus on finding and then executing the next good trade. And this will, in the long run, let profitability take care of itself. The bottom line in my profit and loss in my portfolio is a matter of, to me, just a consequence of good trades. And a good trade is a trade that I enter and exit for definite positive reasons, a trade where I can respect my stop loss and profit-taking rules, and a trade, and this is the most important, where the effect on my account balance is always in consideration. The bottom line in my profit and loss, and that's realized P&L, not unrealized P&L, is what everything I do is about, is increasing that balance. And I've learned over the years that there's some ways to there's some tricks that I'm going to demonstrate today that allow us to take advantage of the unique nature of brokerage accounts in order to grow wealth in trading accounts in kind of a lazy man's way. And that is that a brokerage account is the only bank account I could have that compounds daily, provided I made money trading that day. There's about 243, 250 trading days per year. And if I am profitable, whether it's just be $1, $5, or $500 every single day, those gains compound on a daily basis. And interest compounding on a daily basis in a bank account is astonishingly powerful. And I learned early on that my trading plan would definitely include taking advantage of that component. Today, I'm here to talk about the latest development in my product development career. It is a trading alert service called BKs Alpha. I go by BK in my trading room. And so in line of this philosophy, the problems that BKs Alpha solves is this one. The most frustrating thing I first heard in trading was let your winners run and cut your losers early. But nobody had the how or the why of doing just that. It sounds great in practice, but it sounds great in principle, but in practice, it's very difficult. And BK's Alpha is a product that designed specifically around identifying opportunities to cut losers early and let winners run. It has 3 different main components that I use to find signals on the S&P 500. I am an options trader, a directional options trader on a cash settled brokerage account. So for example, the data I'm working with right now is the CBOE list of penny-wide stock options. I use some recursive fuzzy logic, as well as user input of risk controls, which I have narrowed down into this alert service. And This allows for complete control of the trade from start to finish, as well as being able to clearly identify, after years of fine-tuning the quantitative analysis at play here, being able to identify when to cut that loser quick and when to let that runner run. Now, I know I'm talking about the pie in the sky of trading, and many trading presentations probably have started out somewhat similar to this. Like I said, though, I'm not a big fan of PowerPoint. I'm very much a learn by doing person. And so I thought that today would be a fantastic opportunity to show, first of all, just real quick, I wanted to show the possibilities of what can be done with ThinkorSwim with a skilled coder at the helm. ThinkorSwim, for those of you that know the platform, know that the number one missing feature for ThinkorSwim is a function called backtesting. TradeStation has it, MetaTrader has it. It seems like everybody has it, but ThinkorSwim. But what if I were to tell you that with sufficient coding tools, you could have full backtesting in ThinkorSwim? This is how much it is possible to expand the platform ThinkorSwim. Additionally, it has strategies which allow us to plot equity curves and track P&L. But this can all be coded in for full backtesting capabilities. This is just what's possible with ThinkorSwim. Now, I'm not going to spend a ton of time in ThinkorSwim because odds are people here are pretty familiar with it. It's one of the mainstay platforms. I do use it for my everyday analysis in the trading room. I use it for my everyday analysis in my own live trading. I do execute trades on TradeStation. I have an account over there as well. But I just wanted to show what's possible with some coding skills in a platform we've all seen. But this is a full, reasonably good quality backtesting system. And backtesting is one of the first key components of quantitative analysis, is finding out a strategy and then backtesting it against market data. And in fact, the term quantitative is quite appropriate because it involves a lot of data. Because quantitative analysis allows for taking parameters of a trading strategy and with brute force, optimizing those parameters for maximum profitability by trying out all possible combinations across all symbols that are input into the test. The amount of data that quantitative analysis deals with is astonishing. There's also a couple of other key methodological differences as far as what statistics it considers important compared to the ones we all know and love, like win ratios, Sharpe ratios, profit factor. I'll go so far as to say that, and has some superior portfolio approaches to money management. Now, this sounds great and exciting, and people might have heard of this and just seen then a post of some results with no story to go with it. And today I'm going to provide that story. I am actually going to walk through some quantitative analysis strategy optimization with you folks today to introduce you to this new, wonderful new approach that is what I've been working with for the last 3 years to develop BKs Alpha. As soon as I get my mouse cursor back, there we go. All right, so I would like to introduce you to a platform that not many of you have probably heard of. It's called AmyBroker. This is a brokerage platform that is a standalone brokerage platform. It's not tied to any one specific broker or their data feed. I have independent data feeds that build a local database to allow me to work with as much or as little of the 9,000 stock symbols out there as I want, and I'm in complete control of my information. Other platforms that work like this would be stuff like MetaTrader, MT4, MT5, specifically NinjaTrader. You can wire these into your broker, but they are the next step up above ThinkorSwim in terms of platforms. in terms of complexity. And this being a quantitative analysis and optimization platform takes what you see in ThinkorSwim to absolutely the next level. So what we have plotted here, I'm currently looking at SPY 5-minute. And my current project is I am playing around with some moving average crossovers across different time frames. The yellow plot is a moving average on the hourly. The red plot is a moving average on the 15-minute. And the white plot is a moving average on the 5-minute. My candles are plotted on my 5-minute. Just to real quickly illustrate how different quantitative analysis platforms are from what you might see, I can, for example, remove my price bars entirely. Most people probably thought you'd never cease being able to do that. Now, I picked this as a demonstration today because we're all pretty familiar with a moving average crossover. And that is that when a faster moving average crosses over a slower moving average, that is a signal for entry, either long or short. If the faster moving average crosses to the upside, that's an entry long. And if the faster moving average crosses to the bottom, that is a short entry. That's one of the very first strategies we learn about. It's not a very effective strategy, but when I expand the number of time frames that I'm doing it across, some interesting things happen. The 1 hour moving average is much more stable and much more consistent of trend production than the 15-minute or the 5. And so I have been playing with optimizing the input lengths for these moving average crossovers. Right now, I'm testing the 15-minute crossing over the 1 hour moving average and trading it on the 5-minute platform. Sounds pretty cool that I could do that. And other than that, it looks kind of like a regular brokerage platforms. For those of you in web dev, however, you'll probably see that I have a document object model here. And in fact, this is an integrated development environment, because what I'm doing with this chart is just the very beginning of what I want to show you. And that is how institutions optimize a trading strategy like that to know the best input lengths to put for their moving average crossovers, or the best size position to put onto a specific option contract. Institutions are running this, and I'm capable of running this, continuously nonstop optimizing using quantitative analysis tools such as percentiles and Monte Carlos in order to predict probabilities of outcomes in uncertainty. And I'm actually going to do this right in front of you with a back test of the 15-minute moving average crossover compared to the 1 hour moving average crossover, with us trading it on the 5-minute. And so, believe it or not, we're about to begin, because I've created my own local database, and I want you folks to see how quickly this can be done. All right, first of all, I have already optimized this and input my best possible combination for my moving average crossovers. So I'm going to need to go and break it real quick. So I want to do a moving average crossover on this basket of 272 stocks, which are the penny wide CBOE names. And I want to do it on the 5-minute chart for the last 5 years. This platform can handle it. And this is what built BKs Alpha. All right, so what I've done is I've loaded the trade database for those stocks. And as you can see, we're going back to 2018 here on the 5-minute chart. And all I'm going to do is I'm going to tell the quantitative analysis platform, now that my database is built, which is the hard part, to scan all of those symbols for all trades for a 15-minute crossover of the 1-hour moving average. And these are all the long and short trades that exist across those 272 symbols for that 5 years of historical 5-minute data. It found every single one of them with the click of a button. So if I can find all those trades that quickly, let's see if maybe I can find the best setting for the look back period for those moving averages, because I can range them. A common pair would be the 8 and 13s. But what if the 1 and 20s work better? Or the 5s and the 20s? Well, I would have to test every combination that the two moving averages could have and have the platform find the best one with the highest profitability. Now, watch how quickly this can be done with institutional grade software. Right now, my back test, my cumulative profit and loss at the end of my back test, my initial back test, is only $2.5 million on the random inputs that I did. This is on a portfolio test with an initial equity of $1 million. Minimum number of shares is 10, and we're using SPY. So this was just the random one that I chose. What I'm going to do is I'm going to ask it to compare every possible combination between 1 and 20 for the lengths of my 5-minute and my 1-hour moving averages to set up the crossovers for. And this is all they have to do in the skyscrapers in Manhattan in order to do that, is I'm clicking one button called Optimize. Now, this is very CPU intensive. It's going to take it about 7 minutes using 50% of my CPU power in order to calculate the optimal length for my moving averages. Now, being able to calculate optimal inputs for indicators is immensely powerful, because what if for a particular stock, Bollinger Bands at 1.7 standard deviations work better than 1.3? But there's some shortfalls to this because it involves measuring data, and we develop curves based off that data. And so there is such a thing as called curve fitting. What quantitative analysis does when developing trading strategies is it allows me to come in and spend literally years, as I did with BKs Alpha, to optimize inputs on a trading strategy. And after it gets done with this 7-minute run, the difference in profit and loss, just on something as simple as moving average crossovers, based on the differences in the look back lengths, should be pretty eye-opening. It's the same strategy. It's just all about the settings for those moving averages. How much variability is there in profitability on a moving average crossover between like a 1 and 1 or a 20 and 20 or anything in between? Well, we're going to learn that here in about 5 minutes for ourselves. And we're going to be surprised by the answer. So this is a little bit of what quantitative analysis does. I've been working on BKs Alpha for approximately 4 years, narrowing this down, really about 3 years on quantitative analysis. And it is a text-based signaling service for trade alerts that is based upon this methodology and was designed using these methods. And I can't show past results But what I can show you is I can show you a sample of how BKs Alpha performed on the last full-scale test we did. This is an algorithm that has about 4 years worth of work to it. This is the trading strategy to driving the text alert service that we're offering. And on this last test batch, we did 9 stocks. And we walked away with 8 winners and 1 loser. That's how much this optimization with quantitative analysis can improve numbers. Do you have any questions yet? All right, so when we see the difference in profitability just across a moving average crossover, your imagination should be going wild. What could be done with being able to work with this massive amount of data on strategies that are more complex? And I've spent plenty of time doing that. And in terms of what we might be used to for measuring our trader performance, I'd like to talk a little bit about my philosophy on that. So one of the common things to measure trading performance would be win rate. My trading win rate, people generally interpret it as, is a measure of their skill at the market. But in terms of the function of my trading win rate doesn't have anything to do with how good with how well I trade that day. How well I trade that day is actually a consequence of what generates my win rate. And that's the human variables, the psychological variables, whether I am psychologically in the zone, whether I've had enough coffee, whether I've got my proper workflow set up. All of those influence my trader win rate. They're all internal to me, Bryan Klindworth, not the other way around. And quantitative analysis takes that approach for measuring performance as well and allows us to look at strategies with a much more critical eye. And then the last step in quantitative analysis, the last 2 steps, are kind of the equivalent of single blind tests in medicine, testing a strategy against what's called in-sample data and out-of-sample data to prevent what's called curve fitting. Because a Bollinger Band set at 1.7 might work perfect with Apple, but it could work terrible with Tesla. And we want to try to find general strategies that work across baskets of stocks. And that is called a walk forward test. And then we have Monte Carlo testing, which is actually, in my opinion, the one true metric for decision making on trading strategies going forward. Monte Carlo analysis takes the quantitative analysis outputs from the back testing, the optimization, and the walk forward testing, and assigns various possible outcomes of the strategies based on a percentile. So Monte Carlo would say up to 5% of the time, and this will happen, up to 15% of the time, this will happen, just like standardized testing in school. And the function of that, the purpose of that is to standardize a trading strategy against a percentile instead of an artificial other metric. All right, we are just about done. We have about 20 more seconds left. For those of you that are curious, this took 7 minutes with 6 of my CPU cores at 54% usage. So I am running, the number of calculations that is being done here is I'm running a 5.2 gigahertz clock. So 2 million. That's how many calculations each one of my threads can do. Times 6 divided by 2. So we're doing 15.6 billion calculations per second. And we ran this for 7 minutes. So to come up with this optimization, we did 6 quadrillion. We did 6,552,000,000,000 calculations. Take a look at, as I go through this list. As I go through this list, I'm going to call your attention to net profit. And I'm going to list the winners and the losers. So this is just changing the length of moving averages on a moving average crossover. That's it, the simplest strategy that we can come up with. And here's what my platform has told me. The worst combinations of lengths for those moving averages is for my slow to be at a 10 and my fast to be at a 57. And I will lose over those 5 years trading 10 shares of SPY each time. I will lose $1 million over those 5 years. But just by finding the right inputs for my moving averages, my most profitable one is worth 12.3 million. So my biggest performer loses $1 million, my biggest loser. My biggest winner gains 12 million. And that is with the slow being set at 16 and the fast being set at 16. Because remember, they're on different time frames. We're looking at the 15-minute and the hourly, but we're actually trading on the 5. This is what came into BKs Alpha. Was we designed this for our members at Alpha Shark, and we wanted to offer it broadly as well. That's a heck of a difference from a $1 million loss to a $12.3 million profit. And this graphically represents all those different combinations of moving average lengths. On the one axis, going from 1 to 60. On the other axis, going 60 to 1. And these are our most profitable combinations of moving average lengths, which are right here. And so I am able to immediately identify very quickly the best net profit. But what I can do from here is, let's say, instead, I want the best Sharpe ratio. These are the Sharpe ratios of all those moving average combinations. And this is why they call it quantitative analysis, because we can get really deep into the details very quickly. So what I'm going to do is I'm going to go in and I'm going to optimize my strategy, because it's done. It's optimized. For my moving averages at lengths, I know each one is 16 is the optimal. The computer has tried every calculation, every combination by hand. And I have now just optimized my moving average crossover for maximum profitability. This is what has gone on for the last 4 years. Building BKs Alpha is this type of optimization work. And at Alpha Shark, we are engaged in developing other strategies that might be a better fit for different traders based on this technology and capability. All right, so let's bring in some reports. This shows the portfolio equity, profit and loss growth. This shows adverse events, excursions, favorable and unfavorable. So how many are, and how many unusual events are going in our favor. And this shows the Monte Carlo of the strategy, which is the percentile of profitability. And this is a beautiful result. By optimizing those lengths, take a look at my percentile. 50% chance that it is going to be profitable no matter what. We have a 50% chance of a positive final equity level. So we can clearly see a sharp threshold for where those moving averages tend to be profitable. And Monte Carlo tells me all the percentile outcomes. This is what the institutions are using against us, and I want to put these power tools in the hands of retail. And hold on, I'm going to bring in all the trades. And there's my actual trades. You can see them right there for the different signals that have come in. Now, this is next level software that requires database management, a little bit of data science, as well as additional coding capabilities. But at AlphaShark with BKs Alpha, we have developed a fully optimized from every direction strategy for creating trade signals every single day. I just wanted to demonstrate how it was made because not many people get to see the inside workings of these institutional grade platforms. As far as capabilities, if it can be estimated, yes, I can actually estimate it. I just wanted to give a quick example and show how the algorithm that we developed at AlphaShark was made. Hold on just a second. My mouse is doing some weird stuff when I'm trying to get over there to my chat. Give me just a second. Let me try and recover my chat. I'm not really sure what's going on with it. Okay, that got it back. Okay, so this is BKs Alpha. It runs on the hourly chart. And on each stock, it generates a signal about every 5 days. Sometimes longer, sometimes slower. It is an always on strategy that is always either long or short. And so it always has an affirmative entry and an affirmative exit. The way that our signals are set up, it's not like a traditional service where it would say buy GM February 17th, 36 calls for limit 65 cents, profit target X, profit target Y. It actually responds actively to the market. So the market decides when entries and exits will occur. And kind of the process it goes through, I've got to keep some of it trade secrets, of course, but I can show you the process each day for us at AlphaShark to come up with signals is to simply bring the S&P 500 into a ThinkorSwim watch list and use it to scan all of the S&P 500 symbols. And it will tell me when I have signals ready to go. Joseph, it doesn't monitor 260 stocks during market hours. That's just what I'm working with locally on my current database. It can monitor during live hours. It can monitor all stocks limited to my data feed subscription. Because in order to get a platform like this, I have to basically jailbreak the market data. So for example, BKs Alpha for tomorrow is scanning the S&P 500. And every single one of these black blocks is a possible setup for the algorithm. And we've got all these possible setups. And then it's handed over to two other algorithms. And the signals are generated from those. It is traded on the hourly, so it is going to work on daily charts. Trade durations average, unless there's a stop out, trade durations average a day to 5 days. And we always have signals on hand. Some of them may be a little bit better than others. But all of these, according to the algorithm, are set up and ready to go. So we have 1, 2, 3, 4, 5, 6, 7, 8. I've got 8 longs and 3 shorts that I will then pass through 2 more algorithms to compose the BK Alpha signals for the day. Now, I like sending, based on this strategy, batches of stocks. I really think it's a great strategy to put on like 3 positions at once. So if I wanted to go short Para, QRVO, and HIG, then what I do is I let those trades run, and whatever one is the weakest or maybe doesn't move in my favor, I get rid of. Whatever one is the strongest, I add to it. And whatever one is middling, I just leave alone. The BK Alpha signal service will include those signals, such as when to add on to a position, when to maybe cut a position in half. All those signals will be included. And we are shooting for between 1 and 3 signals per day. And because you are the first folks to hear about this and the first folks we presented it to, we're offering it on a beta testing price. And first of all, I'm going to get a couple of links into chat so you can learn more about us. David, I'm sending those links now. Here's a link to just alphashark.com. We've been around for what, 13 years now? Alphashark.com, and then the purchase link. All right, those links are coming up. David should be able to put them out. And the purchase link is Bryan. And I'm going to go over what the offer is, because it's a heck of an offer. It's a beta testing price because we are still sorting out some of the signal delivering, although AK and I went through a massive amount of testing. And we'll get back to PowerPoint now that we've done all the interactive stuff. All right, so we are offering it for $99 a month for beta test subscribers. It's going to be regularly, when finished, $249 a month for the regular price. We've got 25 beta slots available, and the service will start on Monday, January 30th. It's delivered via SMS text so that we can get it to you as quick as possible. And it's not, the upside to this is that it follows the market, it trades the market in front of it. It doesn't force price targets onto trades. The downside of that is that I cannot exactly predict when signals will go out or when we might be stopped out. The stop out rate that I showed on that demo on that last batch of testings was pretty consistent with what we saw. And the stop loss percentage that seems to be workable is about 22%. So at start, actually, we could just do, I'm going to make this, yeah, starts Monday, January 30th. We'll give you the 2 days for free, the 2 first days for free. The Bryan link doesn't load the page. It should. It loads it for me, copy and paste it into a browser maybe. And everything you need to subscribe is right there. These are all going to be personally sent by me. So there's no middle person that's going to cause confusion. Basically, every night, as my part of my trading routine for my trading account, I sit down and I go through my scanner for my setups. And then generally the way that I trade this is I will wait for that first hourly candle in the morning and then send the batch of trades, pick out my 3 trades. And then maybe by that afternoon, if one of them is a loser, I'll cut it for a small loss and leave the other 2 on. But this is how I have developed a firm and tangible, in your hand, in your smartphone solution to this ultimate problem that when I first started trading, everyone said it's just so easy. It's just so easy. All you have to do, let your winners run and cut your losses early. The service that I'm offering today is for you to allow a quantitative analyst to do that for you with all these optimization tools. And you just subscribe to execute the trades. A sample signal would look basically like this. So it would say buy to open Apple 217 145 calls, limit 45. That's the most that I would recommend paying. And I do include a little buffer there for some time delays. Then we wait 1 to 5 days for the strategy to play out. And I have been doing 3 at once. We're going to stick with that for now. And one of them might be a stop loss if we enter the trade, let's say 10:30. One of them might be a stop loss at 2:30. But then the one might be, hey, let's add 20% to this because it's doing really well. And the other one will leave alone. And then the market tells me to get rid of it 3 days down the line and 5 days down the line. Now we are running this on the S&P 500. And so in terms of worried about, is there going to be enough signals? Well, take a look at what we have today with relatively flatter price action. We've got 1, 2, 3, 4, 5, 6, 7, 8, 9 longs, 3 shorts on just an average day on the S&P 500 that are fired up and ready to go. And when I get done whittling this down, it'll be maybe 6 signals that I like. The other thing that I think of when I design these trades is I think about the position sizing, the cost of the option, and accessibility for our subscribers. So accessibility to signals, no matter if your account size is 6 figures or low 4 figures. And maybe if David is willing to invite me back, I can take you folks through a journey of the magic of compounding in our brokerage accounts and how we can let that phenomenon do a lot of work for us and cut back on our actual trading. Because that compound interest generated daily is absolutely insane. So I wanted to give a tour to as many people as I could of what quantitative analysis software looks like, which is the next level. This is what institutions use. Now they have big servers hooked up to high frequency trading machines. But even though I had a great pedigree, even though I had a great background, having a degree in economics from Chapel Hill, I've always wanted to study this and develop this skill, but remain independent, not tied down to an institution, and be able to put these tools in the hands of retail. You can cancel the subscription anytime, and it'll be $99 per month for 1 to 3 signals per day. And like I said, I usually like to go in batches of 3 to give people a choice or to distribute some volatility risk across multiple names. And so just some quick math on the S&P 500. If we had 6 signals today, then the range of signal possibilities that I've encountered, my worst day has been 1. My best day was like 19. And all this will be done and handled personally by me. All right, do we have any? The difference is that Andrew Keene's trading is based on unusual option activity algorithms. Mine is based on statistical assessments of the market. Mine is technical analysis, quantitative style. So Andrew Keene is based off of unusual option activity and the order flow he sees out of the CBOE that fits particular styles. Mine is statistical and technical in nature. I fell in love with this specialty, like I said, when I combined my degree in econ with finding my first candlestick chart. I just absolutely fell in love with it. Now, to give you an idea of how much calculation really goes into this, the final test is what's called a walk forward test. The first trade with an average trading account should pay for itself. The first two. It depends on whether your first one's a winner or a loser. I can't give out any harder numbers than that. But at 99, it's very, very reasonable. I'm going to show you what my computer is going to do when I do the final step, which is the walk forward test. My optimization test only took 7 minutes. For the final verification test, it's going to take almost 2 hours. The project I'm doing for Alpha Shark on this, when I finish up the moving averages project, is going to take 3 days of my computer just sitting here processing. The only people that chew up more computing power than quantitative analysts are AI. And I do have a very good friend of mine that's in AI. And when we get down to serious work, we tend to work remotely together. When you order, you'll get a template in your email. Especially if it's your first time with Alpha Shark, just check your spam folder, your promotional folder, your social folder to make sure you get it. It's a template with all the instructions on how to subscribe, and we will have everybody set up to start receiving signals on Monday. So we're going to do the last 2 days of the month for free, and this next month's subscription would be for February. All right, and I have a few minutes for any questions. I was told to keep it to 56 minutes. And so I've got 4 minutes left. Joseph, I will fire that question off. We used his personal portfolio as the template. Since you signed up, Joseph, I'll be able to get back to you on that. If you see something for AK's personal portfolio, just set that to the side. I don't think you're going to be added to the list for that. You just got 2 templates. The BKs Alpha and the personal portfolio. So ignore the personal portfolio, follow the instruction for BK Alpha. Yeah, if you sign up today, we'll be doing signals starting on Monday. So the 30th and the 31st of the month, I'll just make freebies. And we can go into more detail in the room as well. But I just wanted to get this offer out there for everybody because timing research seems like a perfect fit for some of my approaches. Fantastic. Thank you, Stephen Colopy. And I hope everybody enjoyed kind of the behind the scenes look at some of these institutional grade analysis tools. It took me a long time to get to where I could do this, but it's definitely paid off because the amount of confidence I have in the strategies I'm using is just irreplaceable. It's so fantastic to be able to sit down, trade a strategy, and know I've looked at every mathematical angle possible. There's no feeling quite like that one in trading. And with that, David, I think I can wrap it up. Again, it's alphashark.com/Bryan to sign up. And again, I hope everyone enjoyed the behind the scenes look. And David, take it away. It's yours.